Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week update. We're going to show you what positions we have increased, which stocks we bought, and we'll update the dividend tracker on trackyourdividends.com. We'll also use ShareSite to show you guys the performance of the portfolio. As we know, this week has just been a crazy week when it comes to performance in the market, and I mean downwards. And so is it a good time to buy? We'll talk about that maybe. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here, the portfolio closed out at $11,655.56. We're up $29.17, up 0.25% for the day. For the 1 week, we are down $168.22, down 1.42%. For the 1 month, we're down $463.60, down 3.83%. For the 3 months, we're down $616.17, down 5.02%. For the 1 year, we're up $962.33, up 9%. And for the all, we are up $1,680.76, up 16.85%. If you look at the 1 year here, you can see that we're kind of almost flatlining at this point, and we're just trying to keep this portfolio alive. As you may have noticed, the portfolio value hasn't changed that much. It sits in that 11.6, 11.7 mark, and we're just pumping it in just to keep it alive. And so as we do, we did make a purchase every Friday. As you can see here, Cisco Systems Inc. is the position we bought because the position total had fallen below that 9% target mark that I wanted in the portfolio. Cisco Systems Inc., ticker symbol CSCO, closing out at $49.33 US, down 28 cents on the day. We now have 10% of a position in the portfolio. We hold about 18 shares. Total position value of $887.94. Average price of getting in is $54.57. And so we are buying below that average price that we are in to dollar cost average down. Show you the position we bought. Here we bought two at 12:58 p.m. my time. Two shares at 49 and roughly 10 cents US, which is 98.19 US with the exchange rate of 1.3076, which includes the exchange fee of 1.5%, which brings our total cost to $128.40. If you're wondering how much of a fee I paid, it was $1.47, which is still better than most trading platforms. Most trading platforms are anywhere from 4 to 5 times more of price when it comes to making those trades. So that's Cisco Systems Inc. The next one we purchased was VFV, as we usually do, which is the Vanguard Sp 500 Index Etf. We buy fractional shares of this as long as our account permits it. Of course, every single week we put in $100, but we do add $25 just to make that fractional share buy in this position. So today it closed out at 94.31 Canadian, down 28 cents, down 0.3%. We now have 4.5 shares. Total position value of $428.33. Average price of getting in is $99.07. It holds about 3.68% of the portfolio. Today's return and total return are completely off, so I'm not even going to talk about that. And fractional buy, here it is, $25 Canadian. We got us in this portfolio an increase of 0.2661 of a share at 93.92, which comes to a total cost of $24.99. So that's the portfolio there with all the updated positions. We have $15.62 in the cash account. And yeah, that's the portfolio. So we're going to head over to trackyourdividends.com, which is over here. I already updated the positions because I was struggling earlier. There's just an ad that just wasn't appropriate. So anyways, portfolio here closed out at $11,586 on trackyourdividends.com. Dividend yield with the updated positions, if you're to build a portfolio today, is 3.56%. Our yield on cost is 4.2%. Annual income coming in at $413 annually. Of course, it's divided quarterly, but also based on the positions you hold. This used to be 407 last week, and so we do have a little bit of an increase. So as you can see here, Cisco Systems Inc. coming in at 18 shares. We are now making $35.04 for the year off that one, and we are getting about 0.5% on the yield compared to today. If you were to buy today, you'd get roughly 3.08%. The magics of dollar cost averaging. As we go down to VFE, we now have 4.5 shares, which yields us almost $5 for the year. You would be getting a better yield than I am when it comes to purchasing that position here today. And as we scroll down here, expected dividends, I don't think this is right. So I'm sure they're working on it. I'm not sure. But that is the trackyourdividends.com. If you want to use it, it's completely free, but you will see ads and sometimes questionable ads. So I had to redo this video one time already. Now onto ShareSite. Here is the performance of the portfolio. Everything's already updated here. We'll just go through it. As you can see, this calendar year, we are still trending a little bit upwards, but we are flatlining in a sense. So as you can see here, capital gains, when it comes to gain in the portfolio, we are down 4.48%, down about $541.19. Dividends, which I really appreciate about this site, is that they include the dividends in your performance, which is fantastic. So with dividends, we've earned about $132.75 based on ShareSite this year, which is a 1.1% increase in the performance of the portfolio. And with that foreign exchange game that we're playing with some of the US positions that we have in the portfolio, we're up about $49.98, up 0.41%, which brings our total return down 358.86, which is a downwards trend of about 2.97%. Yes, it pains me, but yes, we are still doing better than the overall market. As you can see here, Cisco Systems Inc, 18 shares, capital gains of negative 20645. Total return, we're down about $175 in that position there. And VFV, we're down about $21.61. Total return down about $20.95. And so that is the portfolio's performance. So how does everyone feel? How does everyone feel the fact that in the past couple days, we've just been, past few months, we've just been going down? Is this a good time to buy? Is this the point of we just keep buying consistently, getting ready for the absolute bottom? Now, I'm not here to say that I know where the bottom is in this market, but it definitely is feeling like things are on sale, like really on sale. Like some companies are getting really, really attractive, in which I just want to pump some money in there and own those positions. But I feel like the market could continue to go down. Do you want to take that risk? Of course, this is not financial advice. Please do your own due diligence and make sure you do what is for you, because I am just showing you what I'm doing for this portfolio, which is my portfolio. None of this is ever advice. And so for me, a lot of these, especially the big tech companies, are starting to get really, really attractive to me in the fact that I want to start a position in those companies. For example, Google, I'm going to wait till July because they're doing a split. Amazon is looking quite nice. Microsoft is looking quite nice. But the most attractive to me is right now is Google. And that's a company that I know is just a powerhouse when it comes to growth. I know they're like a mega cap company, and they just keep growing. Yet I think it's just it's weird because it's starting to become a value stock, but it's still having that growth that you would expect from a growth stock for sure. Now, it doesn't pay a dividend, that's for sure. So I will be holding it in a different portfolio. And so I'm just getting ready for that. But if you're thinking of making these moves in these companies, just be aware that they could still continue to go down. The investor sentiment is just not there with everything going on. We have inflation happening. We have this stock market going down happening. It's just all over the place. And so some of us may be thinking, oh, I need to sell so I don't lose any more money. But there's always that argument that a lot of people have when they say, just consistently buy. You want to hold through these times. Of course, you want to just ride it out and continue to invest into your portfolio, make those contributions, and continue to make positions and buying in companies that you actually believe in. None of the speculative stocks are really paying out. But if you do believe in the company, I mean, I'm talking like 10, 15 years. These are positions that you want to hold if you want to continue to buy and then average your way down and then continue to average your way up as it comes back, because it always does. That's a good strategy in my opinion, and it always has been. There's no need to sell. There's facts towards it. You can look it up. It makes more sense to just ride it out, continue to keep your portfolios alive. Just let it flatline for a little bit. Don't let it drop. As you can see with this one, it's like that yo-yo, just up, down, up, down. But as we zoom out a little bit, kind of stabilizes in a sense, where a little bit of uptrend, of course, but then you see this flat line that's happening right here. It's kind of stagnant. And that's probably the best time for a lot of investing, because everything is kind of like a constant price. Everything's dropping, but you're bringing your portfolio back up to that level with contributing to your portfolio, or just building that reserve for when you're ready to make those purchases. But I'm really starting to look, because there's a lot of deals happening, ready to go on a little bit of a shopping spree. As long as I continue to make these purchases, you're going to be buying the dip of the dip of the dip. I saw it in a comment. That was really funny. And so I'll just keep doing that. But again, that's pretty much it for the video, guys. So hopefully you did enjoy. Don't forget to leave a like and subscribe. Have a great weekend, and we'll see you in the next one. Bye.